the Malaysian market is on a roll. Since the start of the year, it is up 11.31%, trailing closely behind the US market, which is up about 12.96% within a similar time frame. Now on Friday, the FBM KLCI closed at 1,618 points, just about 15 points shy from its 3-year high at this point over here of 1,632 points. Now, this stellar performance puts us at the fourth best performing market in the Asian region. Yeah, we are firmly ahead of notable markets such as China, Singapore, and South Korea. So a lot of research firms, in particularly Maybank, at the start of the year, they were a bit pessimistic in the local market. Yeah, they predicted the year-end target for the FBM KLCI at about 1,610 points, which is right over here. But just 6 months in, we've already beat the majority of analysts' predictions, which lead Maybank Investment Bank to raise their year-end target prediction for the FBM KLCI to 1,680 points. In fact, a lot of the research firms out there are now raising their year-end target predictions to this range, about 1,680 points to 1,750 points, due to the optimism on earnings growth, number one, global interest rate cuts, number two, the Johor Singapore Special Economic Zone, and number three, and finally the ringgit strength. Yeah, for those of you guys who call up a chart of the ringgit, right, you will see that the ringgit has made quite a significant comeback against the US dollar, at least in the past few months. Yeah, so let's go through Maybank Investment Bank's thoughts over here. So they said core profits of almost all sectors rose by 20.1% year over year during the first quarter, and Maybank Investment Bank expects all sectors to continue delivering higher earnings except for media. It has overweight calls on banks, construction, consumer, gaming, gloves, oil and gas, aviation, renewable energy, and technology. Now, an overweight call basically means that the research firm expects these sectors to continue outperforming in the near future. Yeah, so if a research firm were to place an overweight call on a particular stock, it means that it expects this stock to appreciate in price. So let's talk about Maybank's specific picks over here. Yeah, you guys might want to take up your phone and do a screenshot or whatnot. First one, the top buy list. The first one is SD Guthrie, previously known as Sime Darby Plantation. The second one, Sime Darby. Third one, Gamuda. Fourth, Dialogue Group. Fifth, Top Glove. Sixth, MYEG Services. Then AirAsia X. And finally, SAM Engineering and Equipment. So a lot of these stocks have performed quite significantly well since the start of the year already. Most notably, SAM Engineering and Equipment, it is up almost 66% since the start of the year. Then you also have MYEG up almost 33%. Gamuda over here is up 32.27%. Despite this, Maybank Investment Bank is still pretty confident that these stocks have a bit more upside to go. MIDF research says that banks still remain as solid dividend picks. There are several players that are currently undervalued in the market right now. Now, previously, MIDF was a bit more conservative in terms of the banking industry. Okay, but right now, in their most recent report, they have confirmed that the initial worries concerning 2024 performance, they were overblown. And hence, they've upgraded their call earlier, premised on stronger top line and balance sheet growth outlook. So basically, MIDF is saying that, hey, we do expect banks to continue posting positive profits in the near future. As a fallback, most banks remain solid dividend picks. Several players remain undervalued due to the negative sentiment related reasons or initial expectations of a weaker sector performance for 2024. Now, move on over to MIDF's top picks. The first one is Public Bank with a target price of 4 ringgit and 78 cents. And next one, Hong Leong Bank with a target price of 21 ringgit and 38 cents. Now, I should talk more about MIDF's buy call over here. It means that the research firm expects this particular stock to appreciate by more than 10% in the next 12 months. So you look at public bank's current price over here, you take 4.78 and divide 4.13, yeah, the upside is about 10 to 15%. In fact, MIDF is so bullish on banks, it has 9 buy calls out of 11 banks. Yeah, Maybank, they maintain a neutral call. Only Affin Bank has the sell call over here. You can see the potential upside based on MIDF's target prices. Yeah, even though CIMB and Maybank, they've rallied significantly since the start of the year, MIDF still believes there is a 3.2% potential upside within the next 12 months. Right, let's move on over to the consumer sector. So MIDF says maintain neutral. There's been a solid outlook for the first quarter of 2024. Earnings came in within expectations. On the retail side, domestic consumer sentiment, they have improved because of easing inflationary pressures as well as solid domestic retail trade. F&B industry, wheat prices rebounded back in May. A short-term correction seen in cacao, Arabica and Robusta prices. The poultry industry, mild near-term cost pressures amid uptick in feed input costs. Yeah, this could be possibly due to the weakening of the Malaysian ringgit. Yet most of them, if not all of them, remain below a 2-year peak. Now, talking about currencies, obviously the weakening of the Malaysian ringgit against the US dollar, this could raise raw material costs, but at the same time, MIDF expects it to benefit exporters, which is why probably they maintain a neutral call over here. Yeah, first quarter 2024 earnings wrap, 8 out of 10 companies within MIDF's projections, 5 of them have declared dividends. But despite this maintained neutral call over here, MIDF has 2 strong buy calls on FNN as well as QL Resources. So FNN, the target price is 37 ringgit. Our current price as of 5th June is 32 ringgit and 28 cents. And you can really see, right, how FNN has performed in the past 6 months, or at least for the second half of last year. It's really been on a roll. QL Resources, meanwhile, there's a target price of 7 ringgit and 25 cents. Current price is about 6 ringgit and 40 cents. Similar uptrend to FNN over here. Right, let's move on over to the property sector. So MIDF says maintain positive because there is a stronger demand for property due to the uptick in loan applications as well as loan approval. Positive earnings growth for the first quarter of 2024. Data center venture by property developers, residential overhang at its lowest level since 2018. 2 strong buy calls on Masing Group Berhad as well as Matrix Concepts Holdings. So Masing Group, the current price is 1 ringgit and 75 cents. You can see, right, in the past 6 months alone, it has already rallied quite significantly. Still, MIDF believes that there is a bit of upside to go. The target price is 1 ringgit and 83 cents. Meanwhile, for Matrix Concepts Holdings, target price is 2 ringgit, but the current price is 1 ringgit and 80 cents, representing a potential upside of about 10 to 20%. Let's move on over to digital banks. Boost Bank has recently launched. It is the 4th digital bank approved by Bank Negara Malaysia. Allows you to earn 3.6% per annum daily interest on your savings jars. The interest is calculated daily but paid as a lump sum, I'm assuming at the end of each week. It's also PIDM protected, but it's not Sharia compliant. So how does Boost Bank compare to its competitors? The earnings rate is pretty competitive, I would say. It's higher compared to GX Bank's 3% per annum. But slightly lower compared to Rise as well as Aeon Bank. Take note that Rise, this 3.8% earnings rate will expire by the end of this month. Meanwhile, for Aeon Bank, 3.88%, the promo rate will expire by the 31st of August. So obviously, Boost Bank is a bit competitive, but the earnings rate over here, you can see there's 2 earnings rate, right? It's the higher one is only applicable for savings jars. Let's say today you open a Boost Bank account, you will start by the Boost Basic rank first. And by default, right, your savings account or your main account will only earn 0.5% per annum. At this rate, you might as well go for the competitors, Rise, Aeon Bank or GX Bank, right? Then if you decide to save in their savings jars, the earnings rate will jump to 1.5% per annum. So savings jars over here is pretty similar to Rise, Aeon Bank, and GX Bank. You get to create multiple savings pots, set a savings goal, deposit an initial amount, set up auto deposit, so on and so forth, withdraw anytime. It's just that I don't understand why Boost wants to have like a two type of earning rate criteria over here. Now, in order to earn this promo rate, 3.6% per annum daily interest, you have to deposit and maintain at least 2,000 ringgit within your savings account or any savings jar. In that case, you rank up to be Platinum President, so you will enjoy this 3.6% daily interest on your savings jars, but your savings account will have a significantly lower earnings rate at 2.5% per annum only. Okay, so that's why it's a bit confusing. I know it removes the attractiveness from Boost Bank away from a lot of people, and I totally understand because the competitors such as Rise, Aeon Bank, and GX Bank, right, have little to no requirements. Rise, you just gotta maintain 10 ringgit within account. Aeon Bank is 20 ringgit. GX Bank, zero. You can completely withdraw your account, and they won't say anything. So yeah, as for Boost Bank, you have to deposit at least 2,000 ringgit and then maintain it every month in order to earn this promo rate over here. So what about Boost Stars? As some of you guys have been asking me about this also, because once you rank up to Platinum President, right, you will earn 3x Boost Star for every 1 ringgit that you spend. Now, earning Boost Stars is pretty easy. All you need to do is make a successful transaction. You're using money from your Boost main wallet, your bill payments, online, offline transactions, telco top-ups, payments made via Boost Do It Now QR. So it's not like you gotta use the debit card, then only you get Boost Stars. This is pretty much, they'll reward you pretty much for anything, okay? But cashback-wise, it still loses out to GX Bank and Aeon Bank. So let's go through each example over here. Boost Bank, you get 3x Boost Stars for every 1 ringgit spent. So you spend 1,000 ringgit, you get 3,000 Boost Stars. But when you go and claim it in the reward section, 1,000 Boost Stars is only equivalent to 1 ringgit. So your total cashback is 3 ringgit or 0.3%. Now, in the case of GX Bank, it's pretty simple. 1% cashback, they reward you at the end of the next day or whatsoever. You spend 1,000, you get a cashback of 10 ringgit. Aeon Bank, 3x Aeon points for every 1 ringgit spent. This one at least is until the 31st of August. You spend 1,000 ringgit, similar to Boost Bank, you get 3,000 Aeon points. But 1,000 Aeon points is worth 5 ringgit, making the cashback for Aeon Bank the highest compared to all the other digital banks so far at 1.5%. But there are some caveats for Aeon Bank because you cannot spend the debit card on non-Sharia compliant merchants. There's a lot more things that Boost Bank has yet to release. First of all, it's its debit card, hasn't been released yet, and also its nationwide partners, right, such as Mydin and CelcomDigi, until they release more attractive features. Okay, I'll be sticking with the competitors for now, which is Rise, Aeon Bank, and GX Bank. Shout out to all our gatherer members: Andrew, Wendy, Edward, Alex, Cici, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, Jazz, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, Jindan, Kahmin, Darren, and Adam, as well as all of our learner members. Alright guys, thanks for joining. Bye. Good night.